welcome to Profiletraders. This is Reza and you're listening to my market analysis for June the 22nd. So prior to the weekend, we had all kind of chatters that today we were possibly going to see a run over the banks in Greece, that the debt crisis was only going to get worse and the solutions were very limited, etc., etc., etc. And the whole world was probably expecting that we would open with a massive gap down and potentially deal with a very vicious Monday on the downside based on outside news. And as the market opened and the action was extraordinary chop, as we can see within the first half hour, where we went equally above the open and equally below the open without pretty much going nowhere. Market kind of stabilized and ended up being a very tight range rotational chop where nobody really committed money to make it move directionally. However, the fact that we tried to break above this 2120 and we ended up coming back and closing inside of it now makes this 2120 again an extremely important resistance level. If by tomorrow morning when the market opens I see that overnight has not been able to exit out of 2120 on the upside, I would then expect that with a high probability we should come down towards 2107 sometimes during tomorrow. Therefore now this level of 2120 must be watched very carefully. Also, if we put this on a 120 minutes chart, we can see that there is a very clear cut formation taking place here, where we are getting very close to the apex or the end of this formation. As a result, when you get close to this point where the two trend lines are kind of crossing each other, usually something major is going to happen. It will either be a break out of this congestion to the upside, in which case of course again we have to clear through 2120, and past 2120 we will be dealing with 2125, which will be a touch of the resistance line up there. And at any given moment that we come down and break below this trend line on the downside, then we should see a very aggressive exit on the way down, because this will be now 1, 2, 3, 4, and if we try again tonight it will be the 5th time that market is going to try to break on the upside but will not gather enough buyers to jumpstart the move. And once this is broken on the way down, if we do break this trend line up, the fact that we did marginally today break above 2120 and fail, an exit on the way down will be considered as a bull trap. A bull trap is usually when you make a new high and fail, and instead of continuing up you reverse and completely break on the way down. You just can look at the big picture of things and it's very clear. There is a lot of uncertainties out there. There is a situation with the Greece. There is the situation with our own economy here. There is the decision of what the Federal Reserve will or will not do with the rates, etc., etc., etc. So, as of right now, we can definitely put this market in a bracket which would go from today's low to 21.20 to today's high, which is about 21.22. In order to get out of this rotational tight range mess, one of these two parameters must clear. Personally, do I see a high probability of a break on the upside with a successful break? I do not. But again, I may be completely wrong. Maybe market players see this market as an excellent bargain and still dirt cheap, and they're gonna come buy it like animals tomorrow. Everything is very possible with ES, but I favor more a break below the 21.11, 21.10 in order to go challenge the POC down there, and then eventually even come for a challenge of this low right around 20.97. So tomorrow it's very important right off the open to monitor and see if we were able to bring overseas buyers with enough buying interest to clear the 21.20, 21.2 area. As for crude, it is becoming an extremely mysterious, vicious, nasty little price action and market. Logic is, with all the economy slowing down, logic is with this absolute oversupply of oil on all markets that crude should come down, and since the whole world is shorting crude looking for that drop, mysteriously it is managing not to drop. And as you can see, if I draw a line through all these profiles, I am able to kind of hook them all through one arrow. If I could draw an arrow through the screen, you can pass a line through all these profiles. When you can do that, it is a clear signal that you are dealing with a very congested, tight, uncertain rotational market. Again, the more we rotate and consolidate sideways as we have right now, the more the break will be dramatic when it happens. This morning I was short when I saw the break coming on the way down, but it failed and it came back up, and when it came back up, I gave 60.50 as a Berlin Wall of resistance. I still maintain that level as an extreme level of resistance. If by any chance they can manage to push this through 60.5 to 60.75, we could see a literal explosion on the way up, just and simply pure on short covering basis. There is a lot of people short out there, and they are starting to get very frustrated that the down move is not coming. And the more it will sit here and frustrate them, the more we will see aggressive move on the way up once they are gonna jump board and cover their positions. So on the way up, 60.50 to 60.75 needs to be cleared in order to go towards 61.30. On the way down, it's very simple as well. Obviously, the main level of support that we now have is today's low. We will have to clear below 59.25 in order to drop to the POC down there at 58.40, and then there is another POC at 58.75. My big time frame objective on the way down is anywhere between $55 to $54. But as of right now, the invisible hand is doing a magnificent job of not allowing the shorts to get paid on their position. And that alone, if it continues and they can somehow manipulate price back above 60.5 to 60.75, we could see a very aggressive short covering kicking in the market. Now for our good old friend gold. You know my opinion on gold, right? Good news is bad news, bad news is bad news, every news is bad news, every given day gold should go down. Again today, no exception. Among all the markets, the one that they sure managed to hit, which one? Good old gold. So I really don't know what to tell you. It's so difficult to make any sense of what the hell they are doing with this gold. All I know is that for us to go and challenge again today high, we have to reject above 1187 where all these single prints are. If we pass through 87, most likely we're gonna go delete all these single prints and go up towards 1194, and then after that 1200. On the way down, 1180 is some sorts of support. We break that, we are going to come down for a test of 1176, and right around that point we will be touching again our main short-term uptrend line, which should provide anywhere support between 75 to 1170. Therefore, between 1175 to 1170, if it does hit during the overnight, it should provide very, very nice support. While we are at it, let's put a little chart of euro as well. Same thing. A nasty little chart, very messy, very unorderly. That one we can understand because it's all dependent on outside news, Greece, etc., etc. If it goes up, you must be very well aware of the resistance line up there right around 1.16. We should reject price significantly down. If it comes down and breaks from here, the break point will be this low here at 1.2945. So below 1.2945 we should break down, and above 1.1435 we should go towards 1.16. This one again, the whole world is expecting a collapse because of what's going on in Greece. I would not be surprised that everybody will get caught on the wrong side of the market, and because there is such an amount of short, that we could see a very nasty spike on the way up that nobody would expect out of something so silly and so stupid, such as, for example, a last minute deal with Greece. We have had 7 years to fix the problem. We were not and have not been able to fix the problem, but hey, but now maybe a last minute deal will fix everything. You know how it works, right? So keep an eye on everything in terms of news, etc., because that's what's gonna pretty much run the show. Economic data, Greece news, interest rates plays, etc., etc. Overall, market condition is not the easiest that you can find because it's, again, summer, very few people around trading, and 2, conditions are extremely uncertain because there is way too much outside event and outside news influencing price at this stage. So one must be very tight with risk. These are not the kind of market that you want to be generous with risk because it's uncertain, and when there is uncertainty, it's not the easy market to navigate through. This was Reza with Profiletraders. Thank you for listening, and if you wish to get my courses, you can get them all with 1-year membership to my trading room for $550 from my website. Have a great evening.